In a concerning trend for the Ghanaian economy and government, the recent Treasury bills auction has revealed a continued failure to meet its target for the sixth consecutive week. According to the latest auction results published by the Bank of Ghana, the government fell short by 6.91%, raising 4.624 billion Ghanaian cedis against a target of 4.96 billion Ghanaian cedis. This ongoing shortfall raises questions about investor confidence and liquidity in the market as the government grapples with the implications of these missed targets on its financial strategy. As interest rates fluctuate, the situation calls for a closer examination of the factors at play and, of course, their potential impact on the economy. This morning, Xatse Derick, an economist and finance analyst, joins me to unpack this. Thank you so much, Derick, for joining us.
Thanks for the opportunity.
So we see that the Ghanaian government yet again failed to meet its TBill targets. What underlying economic factors would you say is actually driving this trend?
So basically, it's because the market is saturated, and then they continue to issue auction a lot of TBills, and so the market is saturated. There isn't any much liquidity for the people to purchase those TBills. The other concern is that we are equally in an election year, and people are much concerned about how the change of government will be like, whether there will be a change of government or whether there will be a continuity in government. And so they are concerned about it. Ghana is just coming out of a debt exchange program, and so they are concerned about government policy directions, and this is more or less affecting investors' confidence as to whether they should purchase those or not.
Now, what other policy directions of government would you say might also be contributing to this shortfall, aside from the one you mentioned?
And so basically, people do not have confidence in the government as it stands now, and they are only hoping that there can be that kind of recovery. If you look at the TBill that has been issued, you see that there was a higher performance in the short term as compared to the long term. And if there's a decrease in the long term TBill, then it means that people do not have confidence in the growth of the economy into the foreseeable future. And that is also the bill that the funds that can be used for any kind of long-term investment or anything regarding infrastructure. For the short term, it is just to repay any debt, or government is just going to pay its coupon. The debt exchange program that the government undergone, they are now going to make the second coupon payment, which is just this August. They are expecting to pay about 6 billion Ghana cedis. And so you realize that it's just the short term that people are making use of, because that one definitely to end in November. Election is December thereabout, and so anything that happens after December, people do not have much confidence in that.
So when we look at the long term and the short term, we see this mixed performance of yields across different TBill maturing, and that seems to be quite intriguing. But then what does this imply when we talk about market expectations for inflation, economic growth, monetary policy amidst the overall yield curve?
All right, so for regarding inflation, this is the 10th month that inflation is on a downward trend. And then as at May, it used to be around 23.1%. And for June, it came down to 22.8%. And then for July, it came as low as 20.9%. This is not what people are expecting, but definitely there has been that declining rate of it. And so that is a good thing. And so for inflation, this more or less is also in line with the tight monetary policy. The monetary policy rate continues to remain at 29%, and so basically that is it for the growth of the economy into the foreseeable future. That is where we have a major concern, because if you look at the subscription of the TBills for the long term, you realize that is on a quite low. It's performing just below 20%, and that is quite not good. And so that is also something that affects the investor confidence going forward. Regarding the mix, we're talking about risk aversion. Definitely, when people believe that they need to now be more exposed to the short term than the long term risk, then they will definitely go for the short term bills instead of the long term, because they have a higher risk when they are to purchase the long term bills.
And so when we begin to see this consistency in underperformance of the TBill auctions, it might suggest potential challenges in financing the government's budget deficit. So is this going to be a big problem when it comes to government spendings, the debt levels of the country, and probably fiscal sustainability?
Exactly so, because the government, in one way or the other, needs those money to be able to pay or undergo any form of investment that they have to go through. Now, all what is happening is just short term. And so, if it is a short term, you won't be able to make any significant impact on the economy. What is most expected is the long term. Now, the government will be forced to cut down a lot of expenditure or have to look elsewhere to be able to raise funds for it. They have opportunity to make use of bilateral or any multilateral loans or finance that can come along with it. But for what is happening right now, it's not quite good. But in one breath, it also means that, as I stated earlier, there's a saturation of the economy or the market. Because other than that, people would have been more concerned about paying or buying the 91-day Treasury bill. They are not doing so because they don't have the confidence in it. Secondly, going into the future, that will affect it because definitely there wouldn't be any funds for any long-term investment, and that is right.
Okay, Kache, now, fine, I understand the fact that you talked about the need for a cut in government spending. That would talk about the fiscal solution to addressing the situation. But then let's look at the monetary side. How do you feel probably the Bank of Ghana can respond to this persistent underperformance of the T-bills? Maybe some sort of monetary policy tools that can be employed to address this and probably stabilize the markets?
And so we are concerned if the Bank of Ghana will come in, and we are talking about money supply. And so if the Bank of Ghana believes that there's excess liquidity in the system, and then that is where it can increase the monetary policy rate to be able to more or less increase the interest rate and attract people to make use of the T-bills. But you should also bear in mind that as the government increases the monetary policy rate, and then interest rate for these T-bills goes up, it will lead to a lot of subscription. And when those subscription goes up, the private sector will be crowded out because there wouldn't be any funds for the private sector to undergo any form of investment, whether it's for entrepreneurship or any other thing. And so the central bank is equally concerned as to how to maintain a tight monetary policy rate. And so we realize that for the past month, they've not increased or decreased the monetary policy rate. And that is also bearing some positive fruits because the inflation rate continues to go down.
With the fact that this seems to be the sixth consecutive time that these T-bills will be underperforming, I'm wondering, there are probably global economic conditions that might be affecting it negatively. Maybe there are some factors, on the global continent in terms of probably the financial market trends on the global stage that might be affecting these negatively.
And so when I talk about the decrease or when they are not able to meet their targets, I earlier stated that it's about over-targeting because they are targeting too much, so the target continues to increase. And so maybe the idea is that when I increase the target for it and I even meet 90% expectation, then it means that definitely I'm getting something out of it. But as we are talking about, what we have been recouped is not an easy amount of money. 4 billion for August 19, 5 billion Ghana cedis for 9th August. For 2nd of August, they recouped almost 0.7 billion. That was quite low. But for 26th July, it went as high as 4.1 billion Ghana cedis. And so that is not quite an easy amount of money. As I stated, the market is saturated. We are going into an election. People are more concerned about the confidence of the government of the day, whether there will be a change of government or not. Regarding it, basically, our economy is quite import dependent, and so exchange rate volatility is something that can also affect us. And so I don't see much of it regarding the T-bills. If it had been any other form of a financing instrument, then more or less I can speak much about it. But regarding the T-bills, which is more or less domestic, definitely exchange rate depreciation is affecting it, but interest rate continues to go upwards. For the past 3 months, we've seen inflation coming down. And so you know the relationship between inflation rate, interest rate, and then exchange rate volatility. And so we just hope for the best that going forward, things will improve. And then the investors' confidence will continue to come back once the government or the country rebounds from its tragic or havoc that we experienced as part of COVID and then the 2022 financial downturn.
I'm wondering now, is it possible for the Ghanaian government to probably tinker around or, gain some sort of inspiration from what the Nigerian government has done recently with the launch of the US dollar-denominated bond. It's meant to be all-inclusive, and it's also meant to open up these particular instruments to those who might be willing to put their money into it for some sort of revenue generation. And the fact that it's dollar-denominated takes away some inhibitions that are domesticated within the Nigerian economy. Do you think that the Ghanaian government can take a cue from this to have, some sort of T-bill that is void of some sort of inhibitions?
That is also another possibility. The positive impact of that, definitely to find a way to stabilize the exchange rate, because over the past period we continue to see exchange rate depreciation, and so that is affecting business and food. But when it comes to the repayment, it means that you're going to pay in a foreign denominated bill, which will definitely affect your currency, because when it happens that way, depreciation of your currency is quite high. You are going to service a lot of debt. As it stands right now, we are not servicing debt because we are under the IMF control. We've just undergone a debt exchange programming where a lot of payment plans have been extended. And so definitely that will be an alternative. But as it stands right now, we are under the IMF, and then I'm not sure the central bank will be looking at that in the short term.
All right, Xatse Derick, economist and finance analyst, thank you so much for talking to us.
Thank you.